Hello, welcome back. I'm Rachel. You're watching Kalkine TV live from Sydney. Now, just as the market is coming up into its last hour of trade, let's have a look at how the ASX 200 was trading by lunchtime. The benchmark index ASX 200 continued to trade higher by afternoon following the release of better than expected jobs data. The S&P ASX 200 is trading higher by 63 points or 0.91% to 6,994.70. This was led by gains in banks, health and technology heavyweights. The index had lost 1.9% in the last sessions and currently trades 2.6% below its 52-week high. The market reacted to April's employment data, which showed that the jobless rate fell from 5.6% to 5.5%, while the number of unemployed people dropped by 33,000. The market witnessed broad-based buying, while information technology was the top performer, rising almost 3.5%. Other sectors that saw a surge in buying include financials, industrials, healthcare, telecommunications services, consumer discretionary and consumer staples. On the other hand, the energy sector was the worst performer, falling almost 1%. That was followed by materials, which was down 0.95%. Earlier today, the ASX 200 opened flat with a negative bias, but soon rebounded on the back of gains in financial and tech stocks. The weak cues from US market and lower commodity prices capped market gains. Sector-wise, banks, Australia's listed travel companies remained under selling pressure by the afternoon. That was after carrier Qantas said it would lower the front-end commissions on its international flight tickets from 5% to 1%. That was reacting to the news that shares of Flight Centre, Webjet, Corporate Travel Management and Hello World fell to 7% as Qantas released their news. Energy stocks also fell as crude shed $2 on concerns over rising COVID-19 cases in Asia. Oil and gas explorers Santos and Woodside Petroleum witnessed selling pressure. Miners were among top losers on the benchmark on the back of a drop in Chinese iron ore futures. Global miners Rio Tinto and BHP fell almost 2%. Financial stocks saw gains, with the so-called Big Four banks trading in positive territory. Moving on now to the gainers and losers. Buy now, pay later players EML Payments and Afterpay were the top gainers on the ASX so far today. Eagers Automotive, Ultium and Zipco are among other notable gainers on the ASX, rising between 4 to 6% after tumbling 45% in the previous session. Shares of EML Payments rebounded over 15% to $3.23 and emerged as a top performer on the ASX. The company reports that the Central Bank of Ireland may take actions against its Irish subsidiary PFS Card Service, which contributes 27% to the group's global revenue. On the flip side, technology firm Nuix was the top loser on the ASX, falling over 10% to $3.84. Some of the other worst performers are the Flight Centre Travel Group, Luca Resources, Oz Minerals and Webjet, falling between 4 to 8%. Shares of Nuix dropped over 10%, pairing previous gains as investors reacted to its Investor Day presentation. While speaking at the event, CEO Rod Vaudrey addressed issues and took responsibility for the bad performance of the company. Moving on now to other companies in the news. Shares of Domain are trading higher by 0.5% at $4.41 after the real estate player says it was hit by a cyber attack. The company has informed the Australian Information Commissioner and other relevant authorities about the incident and confirmed that some users' personal information may have been obtained in the attack. Shares of Nufarm rose 2.66% to $5.02. After the company reported strong earnings for the 6 months ending 31st of March 2021 due to robust demand and channel restocking in key markets. While the net profit rebounded to $58.9 million from a loss of $121.7 million in the preceding year, the group revenue was $1.65 billion, an increase of 20% from the corresponding period last year. The Australian agricultural chemical company also said that it will not pay an interim dividend to its shareholders. Core lithium rose as much as 6.5% to 24.5 cents after the company informed its defined additional exploration target of 9.8 million tonnes to 16.2 million tonnes of lithium oxide across 7 different prospects within its Finniss Lithium project near Darwin. The share price of Luca Resources fell as much as 12.4% to $7.68, posting its biggest intraday percentage drop since the 23rd of March this year. This comes after news was released that a subsidiary of the company is taking a 6-month break from its operations due to business challenges. This would be from the 19th of November this year. Province Resources has received firm commitments for its $18 million equity capital raising. Subscription is priced at 15 cents per share, and as of now, it's heavily oversubscribed by environmental, social and governance funds and other institutional funds. Post-completion of the capital raising, their cash position will be more than $23 million. Following the announcement, their shares traded at 12.7 cents, up 1.428. ECS Botanics Holdings is expected to launch a range of terpine blend products under its wellness brand. Terpines are the aromatic compounds that determine the smell of plants. A distribution agreement for 12 months has been signed with Qantas, Australia. That's another medicinal cannabis producer. Boosted by the development, ECS shares trade at 3.9 cents, up 8.33%. And the share price of Qantas Airways is trading higher by 4% around lunchtime to $4.70. That was after the carrier reported a strong liquidity position in the second half of financial year 2021. The company says it has a strong liquidity position of $4 billion. While its net debt started to decline, the company forecasts a statutory loss before tax of more than $2 billion in financial year 2021. Its recovery program is also on track to deliver $600 million due to ongoing cost reduction in financial year 2021. The Australian agricultural company also shared that the first half of financial year 2021 numbers and the result has been positive despite several uncertainties. Reacting to the earnings numbers, the share price fell 1.2% to $1.21. And now let's move on to the global markets. Asian markets were trading mostly lower today, following weak cues from Wall Street, which ended lower in overnight trade amid fresh concerns over rising inflation. Hong Kong's Hang Seng was the top loser in the region, falling 0.48%, followed by China's Shanghai Composite, which was down 0.35%. Japan's Nikkei 225 traded lower by 0.05%. That was amid concerns about coronavirus and the fragile economy. The country's GDP declined 5.1% in the March quarter on an annual issued basis. That was its worst pace since World War II. Taiwan's Taiwan Weighted Index is down 0.05% each, while New Zealand's benchmark S&P NZX 50 traded higher by 0.8%. Now let's take a look at the commodities markets. Crude oil futures edge higher during mid-morning trade in Asia, pairing early losses, with Brent crude futures July contract rising by 0.02% to $66.67 a barrel. The US West Texas Intermediate futures were up by 0.09% to $63.41 per barrel. However, concerns over rising COVID-19 cases in Asia and the American Petroleum Institute's report of crude inventory, they restricted their gains. Adding to it, progress in the Iran nuclear deal is expected to add between 1 million to 2 million barrels per day extra into the market. Now, of course, this could create crude oil surplus into the market and would squeeze oil prices. Looking at the bullion market now, spot gold price traded higher by 0.23% to $1,873.93 an ounce. That's amid a correction in the US dollar and Treasury yields. Now I have a special report to share. Australia's wage growth. It shows a sign of recovery, but public sector remains fragile. The Australian Wage Price Index, which is a key indicator to gauge overall health of an economy, grew at a subdued rate in the first 3 months of the year, even as unemployment fell faster than expected. In the January to March quarter of 2021, the Australian wages rose 0.6%. That was slightly higher than estimates for a 0.5% rise. That was from data released by the Australian Bureau of Statistics yesterday. The index, which measures the change in hourly wages and salaries paid, registered an annual growth rate of 1.5%, while the record low pace of 1.4% in the December quarter of 2020. The tepid growth in pay increase is a matter of concern for the Reserve Bank of Australia, as it is a prerequisite to achieve sustained consumer price growth to maintain a accommodative stance for a longer term. The RBA in its policy meeting on May the 4th had maintained that the cash rate wouldn't rise until inflation was sustaining between 2 to 3%. To meet the RBA's inflation target, wage growth needs to rise above 3%. The public sector registered its lowest annual growth of 1.5% since the start of the series, as wage increase deferrals and smaller hike impacted overall growth. Annual growth in the private sector remains steady at 1.4%. That was for the second quarter in a row, following a September quarter 2020 low. On a quarterly basis, the private sector wages grew by 0.6%, while those in the public sector rose by 0.4%. Industry-wise, education and training recorded the highest annual rise of 2.2%, while all other industries posted lower annual wage growth than the year before. On a quarter-on-quarter basis, accommodation and food services recorded the highest quarterly rise of 1.2%. Electricity, gas, water, waste, rental, hiring, real estate and arts all registered the lowest quarterly growth of 0.1%. Tasmania recorded the highest quarterly rise of 0.8%, with wage growth mainly driven by the public sector, contributing to the highest annual wage increase of 2% across states and territories. Meanwhile, Queensland, Western Australia and the Australian Capital Territory recorded the lowest quarterly wage index rise of 0.4%. The Australian Capital Territory posted the lowest annual growth of 1.3%. All states and territories recorded lower annual wage growth as compared to the March quarter 2020. That's all from me for now. Keep watching Kalkine TV as we bring you the latest news and trending market updates live from Sydney. I'm Rachel signing off. Thank you.